Good day, guys. Welcome to Trading Arbitrage Opportunities with Carbon Ports. Welcome to episode 15. Today, I have you on the weekly time frame, my favorite time frame, the time frame that I set up most of my trades from. It helps me with avoiding the noise that the market normally projects. So, up here, we are looking at the previous. Okay, I was praying for the market to at least give me a third touch on the weekly time frame, so that we can get that on the weekly time frame channel, so that we can finally get that the belief that I normally have when the belief that satisfies my expectations in us creating the next rally, getting the biggest move. I told you about how Wyckoff schematics are formed, and uh, because those Wyckoff schematics were created because of the nature of how the hedge funds operate. They don't trade with their money; they trade with your money. So they before the market gives us that major take off, the market will like move sideways most of the time, and by the time you are busy holding your positions here, it will stop you out, and when you give up on your trades, the market will take off and give us that the biggest move. So there are two ways to look at this. We can look into the widespread economic divergence between the pound and the SGD and say we're expecting something like this here, where this thing that a lot of people call the heads and shoulders. Uh, Normally, when I'm trading uh, uh, this thing that we call heads and shoulders, what I expect is that on, especially when we're trading with many currencies, normally the market drops below, uh, below this line that I have drawn. Normally it drops below it to land on this favorite trend line that I'm in love with. So normally I expect something like this. I expect the market to, you know, it feels better when the market fulfills the criteria that you are looking at, which right here is the previous low that was broken before the market went down over there. So that's how I normally target my trades, which is the 50% fee. And so my expectation would be that we go below this previous low that was broken before the market gave us this reversal. And going below that, we would normally land on my favorite trend line on the weekly time frame and take off. But now those things don't happen because of the widespread economic divergence between those two currencies. And when the market comes back, it barely touches the 23.6. Yes, it does go below it. But if you can zoom into this, if you can zoom into this baby here, let me give you that tiny zoom, you will see that the market did not touch the previous low. this is the how I trade price action. So I did not touch it. It was supposed to give us a wick that drops below it. So not everything goes perfect when we have an economic divergence. Sometimes you discover that the market just flies off the target that you're looking for, uh, and you can see that we barely have any pullbacks in this trade in this trade with the pound SGD because of the economic divergence. So what happened here with the market missing my targets? I want you to look at this part. It is here. This part, the one that is up here on the 23.6, 23.6, this number, 23.6. So here it's below the 23.6 and here it lands on the 23.6. So what I'm looking at here is there's a high possibility that the market may not even want to let me fix this. There's a high possibility that the market may not even want to land on the 23.6 because of the previous low that was broken before we made it down here. There's a high possibility that we might fill this market gap. We call it an FVG, a fair value gap. We might fill this and the market might fly out of you know out of the zone. But then I would be more satisfied if the market can give me a third touch here. One, two, three. If it can land on the third touch here after we manipulated it, I would at least expect the market to land on the third touch and take off, giving us the next rally. But I'm not satisfied with that rally because uh, this weekly time frame channel. But then things don't always happen how I want them to happen. So as soon as the market drops below this 23.6, I will be putting on I have one position up there. I'll be putting on, and I closed one position here when we got the news releases. So now, as soon as the market drops below this level, I would be, I would set up I will set up my buy stop here on the second position. And if it doesn't go down there, my wishes would not be satisfied, and I would love it if the market, breaks above this previous high, if it goes above or manipulates above there with something like a wick and come back down. Yeah, those are the things that I look at in terms of price action. Because for us to confirm that this thing here is a valid order block here, let me show you on the daily time frame. For us to confirm that this is a valid order block, what we need to look at is that we need to break the previous low first to form an order block. For this to become an order block, we need to break the previous low first, and then we need to break the previous high here and come back to the order block and take off. That's how the Wyckoff schematics are made. So this becomes the last part that was touched. This becomes the spring, and this becomes the test, and the market takes off and it does not come back. But then this thing that I wish for does not seem to be about to happen. So we'll see what happens, but you know, never get them right all the time. So let's look into the future of these trades. And the reason why I'm expecting the market to break above this high is to some people trade with volume. Volume is what shows you the strength of the market. But my volume in price action is when the market breaks the previous low, the previous high. It has to break the previous low here. Uh, let's say there's a guy trying to hold an order block here, and his position is up here, and he will create something like a buy limit and have a stop loss down here. So what the hedge funds do is that they need to stop him out first with this. So if the hedge funds, let's say the hedge funds made enough money here, and the reason why we broke below this level is because it makes me believe that the hedge funds they made enough money here, and thus they have enough money to push the market higher. So that's how the hedge funds operate. Even if I get the market to break below this low, I would still be satisfied because that's why I'm expecting the market to either land on this weekly trend line or collapse below this weekly trend line. And the position that I have open here is a very small lot size. So it will pay me over time, but then even if it comes back to you know to close in on my profits because I entered the market way down here. So even if it closes in on my profits and it drops down here, I'm still able to open another trade and recover. I made enough profit here, so even if it that this small lot size position gets stopped out, it's fine. But then if it comes back to this trend line, I don't trust that it will do what I'm looking for. So what I will do is that I will set up the buy stop here and let the market do its thing. If it stops out my position here, I still have a larger lot size here waiting to be tapped in. And if the market gets here, I would be satisfied and I'll be setting up buy stops here to to uh, recover all of the losses that I made in trying to hold this trade. In fact, I've been holding long positions from here, and the market kept moving lower. So this is how I look at price action. These are my price action projections, or what I call my economic projections in this economic divergence. That we have a positive carry in these trades because pound SGD provides me with a positive swap, but the correct currency to trade here is the US dollar. Unfortunately, when I combine the pound and the dollar, they give me a negative swap, and that's why I am forced to use the SGD. And most people talk about correlations. This is how you survive in carry trading. This is how you survive by using correlations. Just like how I was talking about the euro and the euro and the uh, the euro pound trade that I was talking about. So correlations in macroeconomics are very important, and it looks like I'm running out of time here. I'm just trying to show you what happened to the euro pound uh, before we run out of time. So the euro pound is continuing to, give us the trade. This part is this part here. What you see here is this part, and here is up there. So the market seems to be taking us to where we want to go. So goodbye, guys. This is episode 15. let's see each other on. I'll see you on episode 16. Goodbye.